And I think you could see a similar thing where sovereigns want to hold gold that they hopefully never sell, kind of like how I think many individuals should own gold that they hopefully plan to never sell and leave for their kids, and just it's kind of rainy day gold. Whereas Bitcoin is more liquid, especially if it gets larger and quicker to move around. So I certainly think on the sovereign level, you can see that kind of by monetary standard, where they hold both of them for different reasons. Action against Bitcoin and related assets. But I think that some of the tail risks are mostly off the table, at least as far as like an investable probability analysis. And instead, it's more about how else can they poke it whenever they have an issue. And I think with the fiscal backdrop, they're going to continue to have an issue.
Hey guys, welcome to Everyday Finance. The recent increase in Bitcoin represents a financial revolution in progress, not just another rally. Bitcoin is only getting started, trading at about $115,000. The true possibilities are yet to come. Approximately $100 trillion in assets are managed by international organizations. There would be a $1 trillion increase in demand if only 1% of that went toward Bitcoin. It dwarfs today's $153 billion in Bitcoin ETFs, reaching $5 trillion at 5%. That is the launch pad, not a limit. It's not just investors either. Approximately $8 trillion in cash is held by corporations worldwide. Even a 10% investment in Bitcoin would add $1 trillion to the market when inflation devalues it. The focus now is on boardrooms and CFOs making calculated decisions, not retail FOMO. According to Lyn Alden, the view of Bitcoin has changed from that of magic internet money to that of a scarce, liquid, uncorrelated asset that is stronger than currency, harder than gold, and permanently limited to 21 million coins. Massive demand and complete scarcity combine to create a financial explosion that has the potential to redefine wealth itself, not just a bull run. The final rally. Only the warm-up? This one. The primary event? Soon people will ask, how did I miss it? Rather than, why did Bitcoin explode? For more in-depth information, watch the entire interview with Lyn Alden. Also, remember to like, share, and subscribe for more updates on the Bitcoin revolution as it develops.
Well, I think our first part of the discussion touched on that, which is gold flipped the dollar for the first time in a very long time as the biggest reserve holding of central banks. So that's like a first start, and it's still smaller than it used to be. We still are primarily, countries are holding dollar and other currencies collectively are bigger than gold. But now gold is kind of both from tonnage and from price appreciation reasserted itself kind of, back into the fray. I expect that trend to continue over the next 5, 10 plus years. Bitcoin is about 1/10 of the size of the gold market. So it has more growing to do before it's interesting to kind of non-outlier sovereigns. So far we've seen El Salvador, Kingdom of Bhutan, UAE. They've shown some interest. Countries like that have shown some interest in Bitcoin at the sovereign level and have generally been rewarded for it. It's generally not big and liquid enough to be kind of interested to the larger countries. As Bitcoin gets bigger, I think it's also potentially in the conversation for that, and that you can see that that's part of the multipolar set of assets that entities can hold. But basically, the really two big supranational currencies I think we're talking about are gold and Bitcoin. Right now, gold is by far the choice. The interesting thing about Bitcoin is it also settles some of their concerns around payments. So gold is obviously it's a great store of value. It's harder to actually send. Generally, you use a chain of credit to do it. It's hard to actually send tonnage around. It's expensive. For example, Germany's repatriation of its gold took many, many years. Even though it came in faster than they expected, it still took years, and it cost millions of dollars to do. Whereas Bitcoin settlements, you can send $1 billion Bitcoin settlement and wait for multiple blocks to confirm on the blockchain and send it in like half an hour or an hour. So that is kind of this open source non-dollar network that countries could eventually shift to. But I think this will take time. I think again this will be one of those 5 to 10 year things as Bitcoin potentially moves from a $2 trillion network to a $5 or $10 trillion network. At that point, it's large enough where it's more like the size gold was, 5 years ago. And then that's potentially pretty interesting at the sovereign level. So I think as the dollar has that kind of 5 to 10 year set of ongoing problems that I've talked about, like it already had over the past 5 years, I think that'll be the similar time frame where we'll see the ongoing one. You see the diversification of currency, so around the margins, a little bit more interested in China's currency, especially among all these kind of non-U.S. aligned BRICS type nations. And then two, you see this increased ongoing interest in gold and to a lesser extent Bitcoin. The kind of the path over the past several decades was that basically sovereigns would hold gold for the portion of their assets that they hopefully plan to never have to sell, and they would hold treasuries for the portion that is generally more liquid, that they can liquidate in a day potentially if they wanted to. And then of course there were various political reasons why they would hold more in dollars than they probably should have. And I think you could see a similar thing where sovereigns want to hold gold that they hopefully never sell, kind of like how I think many individuals should own gold that they hopefully plan to never sell and leave to their kids, and just it's just kind of rainy day gold. Whereas Bitcoin is more liquid, especially because it gets larger and quicker to move around. So I certainly think on the sovereign level, you can see that kind of by monetary standard, where they hold both of them for different reasons. I wouldn't phrase it quite that thoroughly. I would say that the threat that government's going to tell you that you can't own it has decreased rapidly, especially in the United States. Um, I think where there's still challenges are, I think there's still going to be ongoing anti-privacy rules that basically make it harder or disincentivize or sometimes outright illicit to use it in any sort of private sense. And two, I think it gets tied into that financial repression discussion I talked about before. When sovereigns have issues, um, they try to push the issues where they can. So I think that trying to surveil everyone's Bitcoin, making sure that they're taxing their Bitcoin, potentially in some context putting punitive taxes on people owning assets that whether it's gold, Bitcoin, foreign stocks, extra housing, whatever the case may be. There could be kind of buckets of investments that the government declares are desirable, and that they view as contributing to the nation, and other ones that they view as more negative investments. They could put punitive tax levels on, which is different than saying you can't outright own it, but you just kind of layer on these frictions that are easy to kind of sell to the public. So I wouldn't say we're totally out of the woods in terms of government action against Bitcoin and related assets. But I think that some of the tail risks are mostly off the table, at least as far as like an investable probability analysis. And instead, it's more about how else can they poke it whenever they have an issue. And I think with the fiscal backdrop, they're going to continue to have an issue.
Investors balance their portfolios between equities, bonds, real estate, and even cryptocurrency based on long-term capital market expectations. Investing becomes a game of guesswork in the absence of precise facts on future returns. Bitwise created a data-driven prediction on Bitcoin's future role as institutional interest in the cryptocurrency grows, particularly in light of the world's growing debt, money printing, and currency instability. The appeal of Bitcoin is that it provides a digital wealth storage option that is not reliant on banks or governments. It is a worldwide service driven only by consumer demand rather than by business leaders or corporations. Possession of Bitcoin entitles one to use that system. Bitcoin is becoming more and more popular as more investors look for financial safety as global debt rises and currencies lose credibility. This environment was driven by two significant changes: the advent of quantitative easing following 2008, and geopolitical actions that demonstrated even central banks can no longer access conventional reserves. Although gold has historically been the preferred medium of storing wealth, Bitcoin is the more contemporary option due to its portability, transparency, and divisibility. Bitcoin may someday be held by central banks as a hard currency reserve, like gold, as Lyn Alden points out. For further in-depth understanding, let's go back to the interview.
So when I did interviews earlier this year, I said my base case was that they would ring fence their existing coins, but probably not accumulate too much more. So far, that's the track we're seeing. They legally separated, their coins. They don't want to sell them anymore. They also put Bitcoin and other cryptos in different buckets, so they can sell other cryptos while they're not supposed to sell their own Bitcoin. So one of the budget neutral things they can do is sell other cryptos and use the proceeds to buy Bitcoin. That's one option. The ongoing
Mm.
confiscation of any sort of digital asset for any number of reasons could also be sold and used to buy more Bitcoin, or if it is Bitcoin, added to the reserve. So those are potential options. There are potential gold revaluation options, or similar kind of quote unquote budget neutral things that can be done to add some Bitcoin. I would expect to be pretty muted. They could surprise to the upside, certainly, but I wouldn't really base my investment decision on it. I would say that I'm bullish on Bitcoin without the U.S. government buying anymore. And if they do happen to buy more, that would just add to the thesis. Um, there are other things they can do to kind of add to quality of life of Bitcoiners. They can, for example, and this is some politicians have been focusing on this, which is to make it so that under a certain threshold, certain Bitcoin transactions are not taxed. Right now, if you buy coffee with Bitcoin using the Light Network, for example, that's a taxable event technically. And there are ways that can just make that easier. That allows more payment innovation without worrying about de minimis types of taxes, which I think would be healthy. That basically allows the citizens to use Bitcoin more rather than just stash it on the sovereign level. They can also potentially, strengthen their stance on privacy. So far, I think we've seen a little bit less anti-privacy action in this administration compared to the prior one, but there have been ongoing kind of legally troubling cases around privacy, even non-custodial privacy services, and so that's other things that I think are maybe not talked about enough when everyone's kind of focusing on the reserve. I continue to expect neutral to slightly up on Bitcoin reserve.
Mm-hmm.
Um, and then depending on what happens with the next administration, depending on the next election outcome, I wouldn't particularly expect a Democratic president to add to it. Potentially could even reverse some of it. Could go back to selling it because that's only been done by executive order. That hasn't been congressional law. So they would have it in their right to liquidate it on day one if they really wanted to. So that is potentially as ephemeral as other types of Bitcoin buyers. My base case would be not in this administration, so not in the next 3+ years. When we look at a long enough time horizon, when we start talking about kind of the prior questions of what does this look like 5, 10, 15 years from now, I think that's more likely to enter this scenario where you
Mm-hmm.
have some sort of official devaluation to potentially pay off some of the debt. That's kind of a mechanism they have to spend without issuing bonds, is revaluing gold up. So I think in our lifetimes that could happen. My base case, not out of the realm of possibility, but my base case wouldn't be the next, 3.5 years. I think there has been a shift. I mean, in Trump's first term, he was more anti-Bitcoin, and there's been I think it's been proven that in this, especially this past election, that being in any way anti-crypto and it's especially anti-Bitcoin is not really a winning strategy for elections. There's no marginal vote that a politician gets by adopting that position, and there are plenty of single issue voters and funders for being conducive toward the industry, and so I think that's a new trend. And then two, yeah, they find that they want to own it themselves. I've also been critical of the meme coin trend. I think that
Yeah.
that's a grift that we see not just in politics but just globally. So I think that we kind of there's some that have coined it the golden age of fraud or the golden age of grift, and I think we're kind of in this more this blend of politics and capitalism. And I don't know, it's an interesting environment. Um, I generally am skeptical on a lot of these things. Like I've been skeptical on the size of the Bitcoin strategic reserve, skeptical on kind of the right types of policies coming, skeptical on kind of the citizens' right to financial privacy. And so I tend to take good news with somewhat of a grain of salt and instead look toward tangible things that are happening. And there have been some. It's certainly a better environment in the space. I think one of the other things that goes under the radar is Operation Choke Point 2.0.
Yeah.
And so during the prior administration, there were clampdowns. If you were a Bitcoin or crypto company that merely had a bank account, There are all these attempts to kind of push you out of the banking system. There are many companies that had to go offshore that were just kind of facilitating payments and things like that. And the regulation environment has much improved for many of those. I wouldn't say it's over, and they're still raising concerns. I mean, there are those that are still raising concerns that this is not kind of fully addressed yet. But that has certainly moved in the right direction under this administration compared to the prior one.
According to Lyn Alden, the history of gold provides important context for understanding how Bitcoin is developing today. Prior to 1971, when the United States terminated the gold standard and allowed it to fluctuate, the price of gold was set at $35 per ounce. Many individuals rejected gold as being out of date in the 1970s, but as inflation restored its worth, its price skyrocketed. As gold became more widely accepted, volatility gradually decreased. Alden believes that Bitcoin is going in a similar direction. As it becomes more well-known, its volatility is progressively declining. With a market value of almost $2 trillion, Bitcoin is now a popular choice for large institutional investors looking for assets with high liquidity, robust returns, and little correlation to conventional markets qualities that strengthen portfolios. Bitcoin is even more scarce than gold, which can still be extracted, because its supply is limited to 21 million coins and only roughly 164,000. New coins are created annually, although there are still regulatory dangers. Alden pointed out that as adoption grows and lawmakers become more receptive to cryptocurrency, the trend is becoming more positive. Regarding more general economic issues, Alden stated that while investors are still keeping a careful eye on them, worries about hyperinflation or a global move away from the US dollar are unlikely in the foreseeable future. The question now is whether Bitcoin will establish itself as a modern hedge against inflation and currency risk, a key element of international investment portfolios. As institutional usage grows and its stability improves, for more information on Bitcoin's expanding significance in the financial system, please like the video, subscribe, and leave a comment with your ideas.